Our third presentation this afternoon is from Calidus Resources, and it's a pleasure to welcome Dave Reeves, the Managing Director. We've been talking about the red-hot, white-hot Pilbara gold scene. Well, we've got another contender coming up to the podium. Calidus is said to be one of Australia's next gold producers in the Pilbara, with development work already well underway at its WARRAWOONA project. The project is forecast to produce 658,000 ounces over an initial 8-year life. Calidus has a market cap of 160 million, and to tell us why that's going a lot higher, please welcome Dave Reeves.
Good afternoon all here in Perth, those viewing over in the Gold Coast and those online. Thanks to Nicholas and the team for putting this on in difficult conditions. And as Nicholas said, you know, the Pilbara is red hot, white hot at the moment. As Terry mentioned before, it really is a good place to be. A bit of an forgotten area of Australia's gold fields, but actually gold was found up in the Pilbara pre-Kalgoorlie days, and we're seeing that renaissance finally kick in now. Brief recollection of Calidus. We listed in June 2017 with 300,000 ounces of resource. We put together some contiguous tenements that had never been held together, so we could drill out a coherent ore body. Now got 1.5 million ounces. We've just completed a feasibility study, and as Nicholas said in these photos I'm about to show you, we are into construction. So what we're doing at the moment, this year, we're putting in our base infrastructure. So that's access road, that's complete. The camp, we actually moved in 2 nights ago. The construction force for the village actually moved in, so the camp's well underway. All the water bores for production are now complete and almost finished pump testing. Comms, that's the little tower. The big tower, 60 odd metres, is going up, fingers crossed, well today, and that'll get the comms in early December. And basically that provides all the base infrastructure for next year when we get into main construction. If we talk about main construction, our longest lead item is our SAG mill. We have ordered that, so that's underway and getting manufactured as we speak. Just looking back a year ago, seems a lifetime ago when we were over in the Gold Coast, and this was one of the slides from the presentation at Resource Rising Stars a year ago. Something we're very proud of is meeting all of the targets that we set ourselves. Everything there you can read for yourself. I think the main things are construction has commenced, probably slightly ahead of schedule. Project financing we'll talk about a bit more. That's probably the only other point left to tick off on this slide. But again, something that we do pride ourselves on and something we want to continue to achieve in the year ahead. So a bit of a look at the capital structure. Year ago, I think we were about 22 cents, somewhere around the 60 cents today. So it's been a pretty good journey bar that hiccup in March. Obviously people see a slide like this and go, "Ooh, maybe they've already run. Is this, you know, worthwhile having a look at?" Hopefully by the end of the presentation you'll see why it's just got announced. I bought more on market today, you know, buy the dips. It's to me a compelling case as we move into production. Enterprise value at 135 million. That's almost 1 year's EBITDA. Most gold mines trade on 3 to 5, so there is significant upside still to have in this share price and in the value of the company, and we certainly think that as we continue to tick off those boxes in the coming year, we'll certainly see that value grow for the company. Major shareholder Alkane Resources has been very supportive at 13%. They came in through placements and buying on market. Board and executives, that's mainly money in, is where we've got our position from, so we're highly leveraged to the success of this company. Very good team together, especially coming together on the ground. Between Don, Paul and myself, we've all been GMs at mines, built mines. Mark Connolly, very well known, but we've got a lot of experience in the team, you know, to continue to meet those targets. So where are we? Up in Fortress, Western Australia in the Pilbara. We are just out of Marble Bar, 20 kilometres outside the township of Marble Bar, which is a 2-hour drive on a bitumen road from Port Hedland. Huge amount of infrastructure we can leverage off. This is the heartland of iron ore and to a degree lithium mining in Australia. So there's a lot of infrastructure there already. As we've seen, we're leveraging off communications, that's Telstra and Marble Bar. There's a picture of the Marble Bar Airport. We've got an MOU signed up with the Shire. They'll put in 5 million, we'll put in 2 million, so we can land jets directly there. That helps retain our workforce by making it an easy commute, and that's certainly something we're very well aware of in the future. With the way metal prices are going, there is going to be competition, and you need to make things as good as humanly possible for your workforce there. LNG is a huge win for us. You've got the Northwest Shelf up at Dampier, Karratha Way. We'll be buying our gas from there, trucking it in, so we get a very low gas price and power cost therefore, which is also fundamental in helping your operating costs moving forward. From a resource point of view, pretty well all of our resources are in one deposit called Klondike. We've done extensive drilling here. It is an ore body that outcrops on surface, so we do really understand the geology. To help that, we've drilled it on 12.5 by 12.5 metre centres to a measured resource. That's almost grade control drilling as we speak, to really make sure that we deliver on that grade. That first year of mining is so important. It's your most sensitive as a company. You need to deliver on it, and that's where we'll be starting our mining, is in that measured area. The remainder of the pit is on a 25 by 25 metre spacing, so again, no inferred in this pit, it's all indicated or measured, so we really do understand that geology. There's a red box there with drilled targets in the centre of the screen. We've drilled 3 holes into that already. The 4th is about to intersect that area as we speak. They'll be dispatched shortly for assay, and what we're trying to prove is that the resource doesn't stop at 250 metres as shown here in this slide. We've drilled it to 500 metres vertical depth. We want to prove that that structure and that mineralisation continues, and this mine life will be around a lot longer than the 8 years that the feasibility study has it at the moment. If we have a look at how that converts into reserve, this is a cross-section through the pit of the block model, and you can see that very tight space drilling at the top where the ore body outcrops at surface. The more we drill this, the better the grade becomes with the style of modelling that we've used. So we certainly expect that as we do more detailed drilling, we're only going to see increases in grade, which is a very nice result at the end of the day. What you can also see is a lot of this pit is mineralised. So our strip ratio is very low at 3.6 to 1. That's 4.8 to 1 at a half gram cut-off. And why I mention those two strip ratios is we will use a stockpiling strategy here. So the lower grade material, that 0.3 to 0.5, we keep it to the side and we only treat that higher grade material. That gives us more ounces in the initial years, keeps our cost per ounce down, that helps us repay the banks more quickly, gives us a higher NPV. So we'll be using that as one of the tools to make sure we do generate good cash and good returns from day one, and it's a real advantage to have that outcropping ore body. Another advantage that we've got is metallurgy. This is just sensational metallurgy. In summary, it's a soft rock, so we don't have to put a lot of power into to grind it down. The grinding itself, we don't have to grind it very fine to release the gold. It's quite a coarse grind, so again, low power input. You combine that with our low power costs from LNG, and what it means is we've got a very low cost per tonne to treat this material, but very good recoveries. No nasties in the output, so very sweet metallurgy. From a circuit itself, this is just a cut and paste WA CIL circuit, crush, SAG mill, gravity, CIL, and out comes the gold doré. We have awarded a preferred letter of intent to GR Engineering. They have ordered the SAG mill. They are into early engineering. We're now finalising that contract, ready for main kick-off in first quarter of next year. Just as a side note, we are building a very small little float plant to the side. There are some smaller, higher grade refractory ore bodies around that we're looking to produce a concentrate with, just on the as and when basis as we identify these. It adds production ounces very quickly, opens up more opportunities, but is a completely different circuit and won't come in till a couple of years down, our full focus being just on the open pit and the CIL to kick off with. So what's it cost to build? This lovely new piece of kit, it's about $120 million. 15 million of that is into the mining costs. That's taking the top of some of the hills off, getting a nice stockpile of ore going, getting some of that waste out to use in tails dam and ROM pads, etc., with the rest of the money, the 105 million, predominantly into the EPC plant. Not a lot elsewhere because we do have that good access. We've got an all-weather road already within 6 kilometres. The camp will be half in, the road's complete. The tails dam valley fill, so a very small dam wall, so very small infrastructure costs, low capital intensity, higher returns again. To get a return, you need obviously a good operating cost and a margin to the commodity price. So our all-in sustaining cost is around $12.90 an ounce. Yeah, gold took a hit overnight, but that still leaves a very, very healthy margin of almost $1,400 an ounce as we speak today. So it's a very robust set of numbers when you look at it that regards. If you have a look at our all-in sustaining cost, the red line on the graph, the bottom right-hand graph, it's pretty consistent, bumps up a bit in years 4 and 5. That's when the underground kicks off. But otherwise, we are just producing cash from day one. Ounce profile, that's the yellow bars, top right graph. It is increasing through to year 6. That's the underground kicking in and getting to full production. As I say, that resource is open. We'd expect that, that gold profile to continue into the future and not just fall off a cliff as it appears to do at the moment. Macmahon's have been awarded preferred contractor for that as well, so we're finalising contracts with them and very much looking forward to them getting on the ground next year to kick mining works off and away. How does that all translate into the economics? There's a whole raft of numbers there to look at whichever gold price, and one that's highlighted is where we published the study price at $2,500, which is still significantly lower than it is today, and that generated 110 million of EBITDA per annum versus our market cap or enterprise value of 135. And that's why I keep harping back to that number and why we see good upside still ahead of us. Post-tax free cash flow, almost $500 million at 2,500. Payback on today's gold price around 12 months. There are improvements to this. We actually got our tax advice in a couple of days ago. Those COVID initiatives of being able to write off capital up front certainly benefits us, and we see potentially about another $10 million of cash flow just coming in to help service debt in the first year or two. So there's a lot of little wins happening along the way as well as we fine-tune into development itself. So what's coming up? Look, there's a lot of boxes that are ticked here. A big one was the EPA earlier. We're now into the operating permits. We should get them at the end of this quarter, early next quarter. Financing, we will announce our financing package on the debt this quarter. So watch this space, that's not far away. And I think people will be pleasantly surprised with that. Early work's underway. As I say, GRs will be on site Q1 next year, and 12 months after that, we will be pouring gold. Just quickly, that's where we see the base value coming from for Calidus, is getting this mine into production, producing cash flow. But we certainly haven't forgotten about exploration. We need to grow mine life. We need to look at other opportunities. Having a mill where we will, just out of Marble Bar, really opens a lot of opportunities up in the East Pilbara. So we've got a second prong to our strategy, which is exploration, which we've divided into sort of near mine, WARRAWOONA regional, and then a couple of others, the OTWAYS and SPEC projects, which we've recently announced. If we have a look at Klondike, as I said, it's predominantly all the resources are in one deposit, Klondike, that's on one shear. There's multiple shears through this area. We're only just starting to get out to the one, say Lone Hand. The geologist only walked onto that in the last 2 weeks. We haven't got anywhere outside of Klondike and St George yet. One of the reasons for that is we have been waiting on our detailed aeromag and radiometrics to help us zone in on these high priority targets. We've had all our interpretations back recently, 95 targets, 22 high priority targets, and that's what the geologists are starting to step out on there. We're increasing our regional exploration team for next year so we can start to have a crack at this, because our focus really has been on Klondike and getting through to this development stage. So we're pretty excited about what the year ahead holds and actually getting out onto the ground. Recently, we announced some drill results at OTWAYS. So OTWAYS is a large tenement package out to the east of us. There was one area that had some copper drilling in, so we've just thrown in 6 holes there to see what was there. Outcropping copper mineralisation, in that sort of 0.5 to 0.7% copper, getting stronger and open to the southwest, which coincides with the 1.5 kilometre long soil anomaly. We assayed it for gold. There was a little bit, but not as much as we would have liked. So we're reviewing those results, have a think about how we best add value for shareholders. But no doubt I'd imagine we'll be seeing some more drilling there to expand that so we can make an informed decision on how best to realise value. But outside of that, this tenement package will now start to look outside that first target as well, because there are known porphyries, etc., on that ground. Blue SPEC acquisition, this is one of the sort of bolt-ons we're talking about with that float plant that exists in the area. 220,000 at 16 grams, 220,000 ounces at 16 grams. I mean, that's a beautiful number. That can add some serious ounces to your yearly production, which obviously means more cash flow for shareholders. So that's one of the reasons we're looking to acquire this, and we'll be doing quite a bit of work in the background on that. It's not included in any studies as we speak at the moment, so a lot more work needed, but just to highlight some of the possibilities in the area, like Blue SPEC, we can bring into the fold once we're up and running. Chart that I love, this is enterprise value versus production ounces, or enterprise value versus free cash flow per annum. We are getting all our details together so we can put this up publicly, which you need from a ASX with the compares names beneath them. But on any metric, there is a large amount of value still to be had in our share price. We are going through that stage as we get through debt, as we begin construction. If you look at any other company that goes through this same growth story, there is a re-rate somewhere along the line before you start producing gold. That's going to happen in the next 15 months because that's how long it's going to be before we're producing gold. When that happens, I wish I knew. I wish I had that crystal ball. I don't, but I do know it will happen as long as we keep ticking those boxes. And that's, again, why I think Calidus has enormous potential for investors. So, in summary, a team that's built mines before, that's operated mines before. We've got a great base project, producing a lot of cash flow, very healthy, very quick returns on that. That resource is open at depth. We're just starting regional exploration. We're picking up other projects in the area. There's a lot of very important milestones coming up in the next month or two in particular, and then as we progress through construction and further exploration next year. If you ever got any queries, feel free to drop me a line via email, but otherwise I think that sums it up, and over to you, Nicholas. Thank you.
Thanks, Dave. A couple of questions have come in. The first one is, can you please be more specific on the finance announcement date in Q4 and construction commencement date in 2021?
Absolutely, I can be more specific. It'll be sometime in the next 7 weeks of Q4. And construction?
Construction, yeah.
Commencement?
Commencement of construction.
Depends what you define. We're obviously building. Yeah, look, again, I think Q1 is pretty good. January, you're not getting people there 1st of January, back after Christmas. So let's aim for February, works building up. It's not something that happens overnight. You start with bulk earthworks, then you bring in the concreting and what have you. So it's a gradual build up, but certainly it's not end of Q1.
Excellent. And the second question was, you spoke a bit about your regional exploration potential. Do you have any Hemi-style targets on your ground?
As like with Terry, we get everyone together at the end of the year, have a look at what's going on. We're certainly very well aware of Hemi and intrusive style. We feel that for where we stand at the moment and our understanding of our geology in our area, we're best served by going within 1 kilometre or 2 of where our plant will be, because that's the easiest and cheapest gold to bring back in. The old saying of where's the best place to look for gold, where you've already found it. So I think our focus is very much around feeding the mill. Regionally, yes, we will look at it. Too early to say. Yes, we know there's porphyries at OTWAYS. Are they intrusive style? Too early to comment.
Fair enough. Thanks very much. Could you please thank Dave Reeves?